Okay, hello everyone. It's a pleasure to be here again at La VidConf enjoying these amazing talks. We have a very special panel today. We're going to be talking about central bank digital currencies or CBDCs, and we have a wonderful set of experts in the field. And I think it's very important to frame this conversation and to explain to the audience why it's important that in a Bitcoin conference we are talking about CBDCs. And for that, I would like to take this phrase of Andreas Antonopoulos that said yesterday when we started the conference that Bitcoin was not about a financial asset or a financial revolution. It was about building a more fair society, which I think we all agree that is desperately needed right now in the world. So I think it's important to keep that in mind. And when discussing CBDCs today, try to frame it in that context. Now, why this is so relevant and how they could affect positively or negatively in this construction of a more fair and better society for everyone. So we can go around the table now. Please introduce yourselves and let us know what are you doing related to CBDC so we understand the approach and the perspective from which you are starting this conversation. So Joey, would you like to start?
Sure. So just to give you a bit of very short background, I'm a lawyer based in Gibraltar. I work with the government authority in building out our regulatory framework for this space specifically. I work with different groups from the United Nations ODC side of things for the regulatory authorities in the Southeast Asia region, all the way through to the Water Initiative in Philadelphia and the Digital Chamber of Commerce, etc. So I'm a lawyer by practice, but I'm also on the board of IOV Labs and the Zappo group. So with Zappo, I also act as their representative on the Libra Now Diem Association, which is obviously relevant, and work with different authorities in the development of their, let's call it, stablecoin / CBDC related initiatives. So that's a broad brush. And to answer your question, Gabriel, I mean, from my perspective, of course, it's relevant. I mean, to draw that kind of BTC, CBDC, question point, I think that most people today will understand the layer of interaction that there is between the stablecoin universe, let's call it the extreme sort of Tether example, and the BTC universe. And the CBDC sort of discussion, to an extent, at the beginning there was this argument that blockchain is one thing and cryptocurrency is something else, and they're completely segregated things. And now there's more of an understanding that there's a sort of evolution of that underlying sort of technology, and I would say that the CBDC application is a kind of natural evolution of that, and I can see there being lots of sort of future interaction. That's a huge discussion, but that would be a very short answer to that question.
Thank you very much. Amber?
My name is Amber Scott. I'm the CEO at Outlier Compliance Group. So we're regulatory geeks, meaning that essentially I spend a lot of time explaining regulation to virtual asset service providers and Bitcoin companies. And then I explain Bitcoin companies to regulators. So essentially I have no friends. From a CBDC perspective, as a Canadian, I think that it's interesting to point out that we do actually have a description in our law now, or at least in our anti-money laundering law in Canada, that differentiates between fiat currency, being currency that's issued by a central bank or government and is the official currency of a nation, and virtual currency, which is seen as being different from that and privately issued. So when I think of central bank digital currencies from a Canadian perspective, I really look at that as being digital fiat, which I think opens up some really interesting possibilities. But I don't think that we're going to see the evolution of CBDCs in the same way that we've seen the evolution of things like Bitcoin, which are by design censorship resistant, by design borderless. I think that we're talking about a very different beast when we're talking about CBDCs, but that doesn't mean that it can't have tremendous advantages. My favorite example, which is maybe a little bit of a Trojan horse, but I think that if we can introduce transparency to interbank transactions and intergovernmental transactions, that would be absolutely tremendous. You just wouldn't be able to have something like the LIBOR scandal if you had that type of transparency.
Awesome. Thank you so much. Ezechiel?
Thanks. Yeah, so my name is Ezechiel. So I'm a partner at C Labs working on Celo, which is a mobile-first blockchain platform. We also have our own stable coin pegged to the US dollar. I'm very passionate about CBDC and digital currency technology. I'm a former central banker myself, having worked for many years at the Federal Reserve Bank of New York. And so, when I look at this space, someone once asked me, are CBDCs going to replace Bitcoin? And, to me, the answer is no, because I think that they offer just two different perspectives. I think that when we think about CBDCs, as Amber rightly pointed out, they really are just digital fiat in my mind. They're basically the digital version of the banknotes that we all hold in our pocket. But to go to Gabriel's point about, how can this help society? I think one of the things is, given the programmability of digital currencies now, and given the ways in which people can hold it, and it's a lot safer and easier and cheaper, we can start to include people that have often been excluded from traditional financial services. And so I think that's the reason why central banks are really interested in this, is because for some of them, 3/4 of their population might be, outside of their traditional financial services scope. And so they really do see this as a way to help their society and bring people in and allow them to have access to some of the things that many of us, including myself, sort of take for granted, like bank accounts and access to savings products and lending products and all those things. So I do see this as something as a very transformative, but it's more about the technology and not necessarily who's issuing it, whether it's a central bank or a private, privately issued. I mean, part of it's about trust, and I'm sure we'll get to that too. So, but thanks for having me.
Very, very interesting perspective, Ezechiel. Thank you so much. Now we're gonna pass it to Pawel, but before I need to mention that, as all of you know, this LabitConf was supposed to be hosted in Guatemala this year, but then we had this COVID and the pandemic, but apparently Pawel didn't get the email. So as you can see behind him, he went all the way to Guatemala, and today we have him from the beach. Hi, Pawel, welcome to the panel.
Yes, I'm just gonna pick up my drinks, from the bar, so let me do it. Hi guys, pleasure to be here. Lovely to be there physically, but we're gonna wait for this. So I'm CEO, co-founder of Coinfirm. We are a blockchain analytics company with AML focus. We also launching pretty soon the end-to-end solution for DeFi's in terms of AML, KYC. So the whole space of regulations and crypto, I'm very familiar. I'm former banker as well. Spent many years in compliance in various international organizations. Central bank digital currency, what it is currently, I think currently is it's slightly ICO for central banks, right? So we still, everyone is talking about this. There's a lot of noise, but what's going to come out of this? We need to wait and see. I think it's still very early so far. We see China very active in this space, and expanding. When we are involved in conversation with Bank of England, it's actually a very early stage, for other jurisdictions. So in principle, I think we need to wait what's going to happen. I think that the idea, if we probably in this, with the people around this table, we would sit down and design CBDC, that would be excellent. But let's see what politicians going to do with this.
Thank you so much. Nevin, I know you have a lot of experience in Argentina and Venezuela. You're running a very interesting project. So why don't you tell us what you guys are doing and how this relates to CBDCs?
Great. Hi, I'm Nevin. So I'm the co-founder of a project called Reserve, which is a decentralized stablecoin. Today we spend a lot of our time on our consumer product. So not the coin itself, but a mobile app that is available in Venezuela, Argentina, and a couple of other places, which allows citizens to convert their money from Venezuelan bolivars or Argentinian pesos into a digital dollar. Our stablecoin is pegged to the US dollar right now, as many are. and then freely convert it into other currencies or move it into US dollars in like an American bank account, which is a popular activity to do with an app like that these days. And so it's been a really interesting experience coming to understand all of the intricacies of the informal foreign exchange market in capital controlled countries and countries that have high inflation like this. But we think that this is really the major first really big important application outside of crypto speculation, where cryptocurrencies end up being a really big deal, is sort of creating free access to stable money for pretty much anyone in the world with an internet connection. So when it comes to central bank digital currencies, I think the first point that I would be interested in starting off with is just to point out that in cryptocurrency, we're really used to trying to think about and predict what's going to happen by analyzing what is technologically possible, right? So you have all these discussions about cryptography or crypto economics, talking about incentives and protocols and what could be built on top of what, and it's always difficult to predict how the technologies are going to interact. I think 2 years ago we wouldn't have predicted all of the weird things we see going on in DeFi right now, but it's an exercise in predicting what's technologically possible. With central bank digital currencies, I think it's fundamentally a different dynamic, right? Because like someone just said, like if we were the ones designing CBDCs, there's all sorts of things we would want to do with them. And we could reason about what is technologically possible, about the efficiencies that could be created or the access that could be given to many different people around the world for currencies that they usually don't get to hold. But it's really not about that. And I think you can sort of see that by looking at the current banking system today, where there's so much flow of capital and access to capital that could be made possible with the technology that already existed before digital currencies, before Bitcoin, that has been intentionally limited, intentionally not made available to people. And that comes from, I think, fundamentally, that comes from like the good-hearted desire to stop criminal activity. But sometimes that desire to stop criminal activity, ends up also stopping a whole lot of useful economic activity at the same time. So when I think about CBDCs and what's going to happen with them, I think you have to think a lot about what the incentives are of government bodies, government regulators. They're usually trying to do good things, and what those sort of reasons are going to mean as far as what they choose to do with the technology, because I think there's so much more possible than what is likely to actually happen. And so that's a perspective that I'll try to bring to this conversation today.
That's very interesting and has somehow contradicts what Ezechiel was saying about the potential for inclusion and how much the technology is going to be the driver or the regulatory concerns. So Joey, going straight to the point, does the world need CBDCs? I mean, you're talking to thousands of Bitcoiners and experts in blockchain technology around the world. They know about DAI, they know about money on chain, Reserve, Tether, Bitcoin. Does the world the users need a CBDC?
That's a difficult question, but I would say, I mean, the answer to that question has got to be, I mean, firstly, there's a more difficult question. So what is a CBDC? I mean, because even then, when you start talking about different projects, even that very simple concept, and I know everyone talks about a digital representation of a let's call it physical cash, but it's more complex than that. People sometimes talk about literally a CBDC form of token, let's call it a digitized item, and some people talk about CBDC accounting related systems, basically debiting and crediting transaction protocols, and they call that a CBDC. So people talk about a retail facing CBDC initiative, and then you're talking about not a 1 layer, not a 2 layer, but a 3 layer system with an underlying sort of whatever it is, VASP or wallet provider offering a facility to store and use that currency. Some people talk about a wholesale related product as an interbank sort of payment scale. So what is it that we need, and why do we need it? I would say, that all of the stuff that's happening in the world, I mean, I don't want to repeat something we've probably all heard before, but sort of moving away from a physical touch point to any, physical cash related transaction is becoming a more obvious sort of global direction. And then separate to that, when people look or they could talk about negative implications for illicit activity, CBDCs are effectively, can be completely controlled mechanisms around the application of that technology, completely controlled, whether it's from an analytics perspective, whether it's from a burning perspective, whether it's from a transaction limit perspective. But it offers so much facility. When someone was talking about the design elements of a currency as well, building in smart money layers to a digital currency for specific industries, for specific purposes, building in an interest-bearing facility to effectively a form of digital cash is phenomenal as well. So I would say I wouldn't be jumping up and down saying that the world needs this to happen, but I would be jumping up and down saying this is such an obvious development of the use of this underlying base technology that it is going to happen. And really, it's not that I think that it's going to happen. It's sort of already happening. So again, if we talk about the stablecoin universe and we talk about the numbers that we've seen during this difficult year, and people were talking about crazy numbers of whether the tether cap was at 4 billion, and it was huge, and then it was at 12 billion, and this was unbelievable. Then it's at 17 billion, then it's at 18 billion. I mean, these are big markets of small transactions that are happening and existing. So again, you already also have, and I won't go on about this, the BIS and the FSB and all of the ECB and the G20 and all of these massive international bodies setting now standards of what they expect to see. So again, when that starts to happen, it's a slow moving exercise, but it is going to happen. Will it be a positive? Yes. Will it be good for the entire ecosystem? I think yes. Will it happen? Absolutely yes. Is it absolutely base layer needed? No, but what is needed? It's yeah.
Okay, very insightful. Thanks, Joey, and we know that you have very deep connections in all those conversations. So thanks for these insights, and also thanks for clarifying the different types of CBDCs that we could have. Because sometimes we use the acronym, and some people are thinking in just central bank reserves between the central bank and the banks, and some others are thinking retail, like general public using this token. So, Amber, what do you think? Does the world need a CBDC?
I think so. In your first question, you were talking about do users need it, and it kind of depends on how you define users.
Okay.
I think for the people at this conference that are interested in Bitcoin, that know how to use cryptocurrencies, it's not probably super exciting. But I think one of the most interesting CBDC pilot projects that I've seen is in the Bahamas, where when I was there not very long ago, maybe a year and a half ago, I was paying a scuba diving guide, and he had the app, and it didn't work, or it looked like it didn't work. And then I paid him in cash, and then we found out it actually did go through on the app twice. And so he had to physically go to a bank on another island to talk about why the transaction needed to be reversed. He couldn't do it in the app. It was this long, convoluted process. So when I look at the underlying infrastructure that exists and how easy is it for people to access, do I think they should have an app that works, that allows them to do transactions relatively easily and freely? And mind you, it is between, the same as it would be for a bank account, between vetted users. But I think there's incredible utility for that, because the rails just aren't there for people to transact the way that they should be able to transact in the modern world. So I think there's a lot of potential for good in CBDCs. And it may be for people that aren't necessarily going to be your core cryptocurrency users, as Bitcoiners, as the folks that are here. But I don't think that means that it isn't useful and that it isn't needed in various contexts.
Okay, and just to jump in, Gabriel, very quickly, because it is interesting. Sorry, I mean, just to sort of open it up, but it's really interesting that when we talk about the Bitcoin community, no one is sort of arguing about standard setting exercises for an unhosted wallet or whatever it might be, or even a hosted wallet. But in the CBDC world, I find it quite interesting, and what Pawel said about in the ICO sort of universe, and that's true, that there are lots of small jurisdictions that are saying, yes, let's issue a retail facing digital currency. And then it's very easy to think of a central bank currency, central bank digitizing a reserve through an intermediary that's a bank. Now go to the banking world and convince them to develop a digital wallet system that's interoperable with a fiat payment rail system, and ask them to produce that in someone's mobile wallet to allow them to hold custody their national currency in a safe way, that allows them to interoperate, that's secure, that's low cost, that's resilient, that's scalable, that's interoperable. It's not easy. It's not easy at all. So I mean, sometimes it's like I'd love to see it happen, but it's a serious exercise. And some people are just sort of talking about it like, yes, it's wonderful, let's digitize everything, but there's a lot of complexity, a lot of complexity.
Yeah, it's difficult to compete with the level of innovation that we're seeing in the open blockchain crypto world.
Yeah.
So it's part of the challenge. Who's going to serve that scuba diver teacher? The Bahamas Central Bank or the Bitcoin and smart contracts community around the world first. Ezechiel, what do you think?
Yeah, I mean, I think it's an incredibly complex discussion. I think with money, it's even more complex because when you think about like when Uber and Lyft kind of disrupted the transportation industry, it's one thing. But when you're disrupting sort of the financial system, it's completely a different thing. I sort of think of money as this public good. And to Nevin's point, and maybe pushing back a little bit, like I think that the reason why traditional banks haven't really served people is because on some level it's not in their interest financially. They care about the big transactions and the millions of dollars they're going to get in fees. But when it comes to like helping somebody store value on their phone or send money, like even if it's $5 from one place to another, it's not necessarily in their incentive to do that. But the problem is that, so who does that fall on, right? So if we agree that money is a public good, who does that fall on? And very often it falls on the central bank or the finance ministry or the monetary authority of whatever country. And so, people look to those entities to say, listen, like you give me my banknotes, but the world is turning digital, right? And these banknotes are analog. I need to get on this digital world. And so they're going to go to, anybody who provides them that service. So whether that is Bitcoin, whether that is a stable coin issued by anybody. And then I think it becomes this idea, well, if money's a public good, and if something goes wrong and you lose your money, you typically end up then turning again to your government and to your financial authority and your Consumer Protection Bureau. And so, central banks and monetary authorities want to make sure that, when they build these technologies, that they're doing so in a way that is putting the customer first and making sure that there's like privacy and stuff like that. And so I do think that on some level there certainly has to be a partnership between the public sector and the private sector. But on some level, the private sector may not necessarily care that much about servicing all of the populations. They just kind of focus on the ones that they can handle. And that's why you see a lot of people, you see these banking deserts, right? You see people who live in remote areas where they don't have ATM branches, they don't have banks. They have to go miles around. And so for them, a digital currency is really applicable. So I do think we need it. I'm not going to go so far as to say that it has to be provided by, or let me put it this way, it doesn't have to be issued by a central bank, which is what a CBDC is by definition. It is a central bank issued digital currency. There are ways in which a private sector could issue a digital currency that is backed by a central bank liability, which gives you the same thing. It's very much how we think about, or how we do money today, right? We have central bank money, which is the banknotes, but then we also have commercial bank money, which is the deposits that you have in your bank. Those are actually, from a liability and an accounting perspective, two very different things. And so you can have this, you can still have a system that works very similar. But I think that at the end of the day, people just want to make sure they have something that they can use to pay their bills and to pay their friends and to store value and to start saving and stuff like that. And if the private sector isn't going to do that, at least on a base level, then I think that the public sector is going to have to come in and help at least start that and create a foundation for that.
It's very interesting.
Can I respond to that? I think
yeah, go ahead.
That it's a good point about how, like, you know, these private you know, entities that are banking institutions, like you're saying, I agree that it's not in their interest to offer those services to smaller customers, and that's usually because the cost of complying with the regulations is higher than the amount of revenue or profit that you would get from serving those customers. And so we do see, you know, like if you're a citizen of a country like the United States, we do see all sorts of financial apps that make it super easy to store $1 and send $1. You can do that for free. You know, there's, you know, any number of apps and banks competing for your business to do those types of transactions because it's not that costly for them to deal with you as a customer from a regulatory perspective. But as soon as you talk about you know, basically people from, you know, other countries, especially like remote countries that bankers don't know a whole lot about or that are on a list of risky places, then the cost of that compliance goes up. And so I see what you're saying, that, you know, now this sort of public good of allowing people to transact with those stable currencies ends up not being served by those private interests. And so I think it's an interesting point. Maybe it's the case that you could have a regulatory regime where surveillance is desired, or where you know, prevention of some types of actors transacting is desired. But if the public institution is the one offering the service, maybe they're less discerning in who they make it available to because they're not making that profit-driven decision. I think that's an interesting possibility. Gabriel, to answer your question from my perspective of, you know, is this needed, or like or to reframe it a little bit, like what's the main benefit? You know, as you can see, I think that there isn't going to be necessarily a huge benefit in terms of opening up access, because I really think that could just happen with today's technology, and we're choosing not to do that. But I think it stands to reason that there should at least be a huge amount of efficiency that can be gained by basically upgrading the way that our money databases work, right? Where it's like, the way I like to think about this is, you know, maybe I'm not the best person to answer this question, but it's like, I've tried to figure out, like, where are the dollars? Like, where are the United States dollars stored? What is the series of databases that's being used to track where the dollars are? And, you know, maybe I'm like dumb, but I can't really figure it out. Like, I've spent some time Googling and trying to understand this. Maybe other people on this phone call understand it, but generally, even people who think they understand it, if you ask them enough questions, there's eventually sort of like, I actually don't quite understand how that works. And if it is possible to have, you know, a single database that, you know, many people, including the public, can actually directly transact with, you have to think that there's probably going to be a lot of efficiencies in terms of how the clearing happens, how the transactions happen. And I think that we're seeing that happen already with, you know, stable coins like USDT and USDC. You know, they're getting popular. A lot of those transactions that are starting to happen with businesses, it's just because it's more convenient and a little bit cheaper to do that transaction than dealing with sort of the layers of databases that are involved if you're dealing with, you know, a financial institution that's working with a trust, that's working with your banking app or whatever, like all of the sort of complications that sneak in terms of the regulations and whatnot. So I do think that we should, in the macro sense, for all these CBDCs, expect at least efficiency gains in terms of the database structure for just keeping track of money.
Thank you so much. And Pawel, before going to you, I would like to add a second twist to the question, that then I'll pass it to the rest of the panel. So are CBDCs needed for the users? So what benefits are they bringing to users, or they are needed by governments and central banks? So who really need this technology? What do you think?
So I think society needs actually this technology, frankly. You know, so in my world, you know, I believe that we have two major problems in the world currently, right? One is money laundering, and second is corruption, right? Without this, actually, we're not going to solve any other problems. You know, so it's actually You know,
so financial inclusion and poverty and inequality come after money laundering.
Exactly. Without actually, dealing with corruption. I mean, you have the whole Africa, with this problem. So that's actually something that you need to solve first. And central bank digital currencies or crypto actually are solving this problem, right? And this is something that society actually needs this. And from the conversation, and when we speak with central banks, there's this question about protecting transparency. Actually, it means that in the traditional way, it means that how to hide transactions, right? Second is how to protect privacy. I mean, you can do this in terms of technology available, right, with blockchain. So there's a number of questions a number of problems which we can solve using CBDC and using crypto, using blockchain. So that's actually something that I think it's going to happen, force which not be stopped.
Okay, so let me put the Bitcoiner hat here and ask Joey and the whole panel. So we talk about transparency, but a Bitcoiner would tell you that transparency or bank secrecy actually is not protecting users, it's protecting banks from the public knowing that they don't have the money that they claim they do. We talk about money being a public service, and anyone from Argentina or from Venezuela will tell you that actually money is a way for government to collect inflationary tax and seigniorage. So it's cash, it's working for governments and not as a public service for users. And also from a non-American, from a non-US perspective, you would say that the US dollar is not only serving consumers in the US, where they can claim and go back to the Federal Reserve if they have an issue with it. It's more of a geopolitical tool that somehow governments with those kind of fiat currencies will try to protect for geopolitical reasons. So, Joey, as we discussed, whether CBDCs are needed for users, are they desperately needed by governments and central banks?
I mean, are they desperately needed? I mean, I would say, it's interesting because you talked about some of the problems or the issues, a bank not holding a particular balance sheet or asset. I mean, that to an extent is also something that can exist in the stablecoin universe. I mean, it can, if there isn't proper audit and transparency around that, that creates all sorts of, and the CBDC or the direct, let's call it, issue of something that's redeemable against a central bank directly or indirectly through a bank provides a lot of security. Why would the banks themselves need the application of this technology? Look, we're talking about lots of things. Tax. We're talking about a tracing and tracking mechanism around everything that's happening on the entire payments network within an entire ecosystem. We're talking about efficiencies, so donations, subsidies. Imagine everything COVID related and anything in a difficult jurisdiction to operate in. That central bank or authority has a mechanism to provide a direct interaction, not through a banking rail system with any particular user. Massive, and COVID will have been a big eye opener around that. And also, as Pawel said, I mean, the money laundering and illicit related activity, people forget about Bitcoin. If you look at the actual numbers of money laundering breaches and illicit activity, where does that happen? It happens on cash rails. That is the by far and away number one illicit platform or use of its uses is absolutely the number one application or in that universe. So again, you digitize that. Is there an authority that's discouraging illicit activity and reigning in control around the operation of cash? If you're digitizing everything, you have transaction histories, you have analytical analysis, you have freezing mechanisms, you have all sorts of control mechanisms. You could be essentially saying to a central bank, if you want to have proper control over the entire cash-based drug infrastructure system that operates in your country, you have a way of controlling that. That's got to be an underlying sort of point that those authorities consider. So I see lots of things where there is benefit for the user. I see lots of things where there are sort of complex in the application, but I do definitely see a lot. I would say the weighting is probably more in favor of those government authorities and the benefits that they'll seek to generate from these infrastructures than the user. That's just my thought, though.
Thanks. Amber, what do you think?
I go back to the idea that in my dream world, this is a very powerful anti-corruption tool. And so, what I'm talking about there is large-scale corruption that happens between our trusted institutions. I think that there's tremendous potential for there to be a public good, although maybe it's unintentional. That is what I see as being an inevitable outcome.
But Amber, the corruption in general is run by the politicians that will be controlling the CBDC. So how would that eliminate?
I think if we build it right, then it becomes a little bit of a Trojan horse. Where my hope is that the folks that are perpetrating the corruption aren't really aware of how much it's going to make them susceptible to the type of surveillance which they're subjecting the population to the type of evidence that can be admitted at their trials as we hopefully oust them from places of power. Like I said, in my dream world, but I think that technology always has the potential to be a powerful anti-corruption tool when we use it correctly. And I'm a firm believer in the idea that our banks, our politicians, our institutions have a duty to transparency, while individuals have a parallel right to privacy.
Absolutely. Yes, I completely agree with that. I don't know if we're going to be able to sell the CBDCs to central banks with that pitch, though, because in general they are interested of the opposite, no? But yeah, I completely agree. Ezechiel, what do you think?
Yeah, I mean, look, I think that, I think that definitely CBDCs are needed by governments. I think all you have to do is look at the reaction that they had with Libra's, or now Diem's announcement back a couple of years ago. Before that, central banks had been studying whether or not, they've been studying this issue of CBDC. It hadn't really gained much traction. They certainly looked at Bitcoin. They didn't really see any competition with Bitcoin at the time, given Bitcoin's volatility. And so they weren't necessarily focused on that. But I think that when you look at what happened with the announcement of Libra and the growth of stable coins all over the world, definitely you can see that central banks certainly feel that they need to look into the situation. And so I think that, from their perspective, the idea of having, I don't necessarily prescribe to this notion of worrying too much about, the big brother. I mean, it certainly is there. I just don't think central banks, honestly, they don't really care that if I particularly send money from one person to another. I think from a macroeconomic perspective, having the ability to understand the flows of a financial system and understand the transaction flows from a macro perspective is a very, very powerful tool. And it would help them understand not only how their own policies kind of reverberate through an economy, it would help them then kind of focus that a little bit better. So I think it would make monetary policy more focused, would make better for society. Right now, when people raise, when central banks raise interest rates, or when they do monetary policy, it can sometimes have a lag of like 12 to 18 months. A lot happens between 12 to 18 months. And so, but if you know instantly kind of how that money flows, your reaction is a lot better. Also going on what Joey said, the idea of stimulus relief and relief for COVID, all of that can be done faster, cheaper, more efficient, more transparently. And so there are so many gains from a government's perspective that I think that they absolutely need that technology. And you can see it, and that's why they kind of reacted the way they did when you have these big companies like Facebook and their organization.
Yeah, Ezechiel, let me ask you a second question there, because you have this US perspective that I think is quite interesting. Do you really believe that these are the most important features or aspects why the Federal Reserve is discussing and planning to move forward on CBDC, or is that they are concerned about these free printing press that they've have had for the last 50 years, where basically everyone in the world saving a few dollars is basically giving free money to the US government. And they are concerned that if there's technological shift towards digital CBDCs, maybe the Chinese CBDC might become more popular, and they will just lose this demand of value that gives them the possibility of just selling dollar notes.
Sure.
Isn't that the underlying concern behind the CBDC from a US perspective?
Well, to be very honest, I don't know. I mean, I honestly don't think that the Federal Reserve is worried about the hegemonic power of the dollar. Honestly, that's probably something more for a politician and more for a political administration than for a central bank. I think that the Federal Reserve, like every other central bank, is very concerned about having a large technology company or some other institution, a private institution, issuing money on their turf and taking away their ability to control monetary policy, right? That's the same for the Federal Reserve. And obviously their monetary policy reach is bigger because, as you said, dollars are sort of everywhere. But I think that also goes for a small country and a small central bank, right? They don't want to have to compete against Libra, because what happens if Libra decides that they want to, flood the market with money and create, inflation? And if the central bank has no control over the issuance or over that channel, then all of a sudden they really have no control over their society, and they're just seceding that to Facebook. And I'm not sure that that's what they want. And I don't necessarily think that's what the citizens would want. But that's a big discussion. And I know we only have a few minutes left, and I don't want to monetize or monopolize everything, but I'm happy to have that discussion at another time.
No, I agree that they want to be the only ones with the ability of flooding the market with cash. Go ahead, Pawel.
Gabriel, I think I completely understand your concerns. I understand completely where you are going from. I'm actually, I'm from Poland, so we are post-communist. I remember still communist time when actually Big Brother was watching, so it's not something that, you don't have these concerns from, in terms of CBDC. I think the central banks will be moving into CBDC because market will be forcing them to move there, right? Like, what was Ezechiel said, we have Libra, DM, we have Bitcoin, we're gonna have corporates issuing their own tokens. It's gonna happen. You're gonna have non-fungible tokens, coming in. I mean, this market's gonna explode. So if the central banks will not be there, they're completely gonna lose control over what's actually happening in terms of financial means, right? So that's something which I see, but I completely agree. If we don't get this right in terms of protecting privacy, protecting ourselves from being chased by governments, there's a reason why Bitcoin was created, actually.
Yes, and I agree with what you're saying, Pawel. And some people might believe that actually is good for society, taking money away from politicians, from government, in the same way that religion got separated from government. And as Amber was saying before, the main source of corruption is in our government. So maybe taking money completely away from them, it's a solution. Nevin, what do you think? Yeah.
Big group in, like, you look at France, there's big group saying that actually almost take every money from the people and give it to government. So government is giving us back. So that's something, another utopian, version.
Nevin?
So I think, if you imagine being someone as part of a regulatory body and or a central bank today, I like to sort of make the positive case where it's like, it's really popular to try to make data-driven decisions, right? Who's not in favor of data-driven decisions? Who's not in favor of, good data analytics in order to make decisions and take action? And so from that perspective, you can sort of see why a central bank digital currency where you have access to so much more data is just going to be a really popular idea right now. And it's going to be hard to stop that from being the direction that people take. I want to close with try to make an interesting prediction here. So when I imagine being a person in crypto, maybe someone watching this who's not as deep into all these regulatory discussions, who's maybe interested in DeFi and Bitcoin and all that. One question I have is, are these central bank digital currencies going to be on the platforms that we use in crypto? Are they going to be on RSK and Ethereum? Are we going to be taking, USD or CNY or, other smaller currencies and making weird derivatives out of them in a DeFi smart contract and, all sorts of things like that? And here's my current prediction. My current prediction is yes. But it's not because I don't think that these central banks will issue directly on those platforms. I think that would be pretty surprising because then people could transact pretty anonymously. But what it does is it makes it so that anyone can create a stablecoin with a CBDC if you're able to custody it yourself and then issue a token on Ethereum or on RSK or something against that. Anyone can be a custodian and thus an issuer. Whereas with like US dollars or something, you have to have like a big bank, a big institution to issue a fiat-backed stablecoin. Now, say that China has a CNY stablecoin, say, and lots of individuals can hold it and actually issue tokens against it. Well, maybe that means that it's much harder to stop essentially the same sort of thing as wrapped Bitcoin, but with these central bank digital currencies. So I currently am optimistic that the crypto industry will find lots of ways with that better ability to custody these fiat currencies, and we'll see CNY and a long tail of other currencies once they become digitized, integrated in all this sort of like weird DeFi smart contract craziness. So I think that could be a pretty interesting thing where maybe we start to see a lot of normal fiat Forex happening in this weird crypto smart contract based way. And that's one thing I'm excited to see play out.
I love that concept of wrapped CBDCs, and how freely people will be able to create these kind of derivatives on top of CBDCs. So just going a full round around the table with some final thoughts. I think we all agree that these CBDCs will exist. They will find their place in this ecosystem. That they will have to compete in order to get attention and resources from users. Final comments, final thoughts for all of you in 30 seconds. Would you think about this in the future, and what do you think the outcome would be, as Nevin said right now? Joey, final thoughts?
Super difficult. We've got 5 seconds each, so I'm just going to summarize. Nevin said on Ethereum RSK, I would say always on RSK, and I would say there's all the models that we're looking at, they can happen in many different ways. It's an exciting area and space to be involved with, and I'm glad we're all participating.
Amber, final thoughts?
I think what Nevin said is inevitable. I just hope it's also easily auditable.
Ezechiel?
Yeah, I mean, I think that building bridges between, central bank private networks and public blockchains is going to be, the next thing that we're all going to be focused on. So totally agree. Yep. Looking forward to it.
Thank you so much. Pawel?
Okay, so I think, if we get this right, it's going to be great, but there's huge risk that it's going to be really, terrible.
Okay, so that on that positive note, thanks all of you for being part of this panel. Thanks LaBitcoin for giving us this space. A very exciting subject that will definitely will evolve in very interesting ways in the future. Thank you so much to all of you.
Thanks everyone.
Thanks for having us.
For having us.